We at Rabobank have just published our agri-commodity outlook for 2018. It includes our price forecasts along with supply and demand projections for agri-commodities. And in this video, we will discuss some of the highlights. In 2017, soft commodity prices were particularly weak. Looking ahead for 2018, we may see some changes. Prices for many commodities are currently at relatively low levels, but balance sheets are forecast to tighten, slowly reversing the trend of continued stock building. We view weather as the biggest risk factor, not only when it comes to prices moving lower in case of once again above trend yields, but particularly for prices to show a strong upside reaction. The potential development of La Niña needs to be monitored closely, as there is currently a 70% chance of this weather phenomenon materializing in 2018. This could bring severe dryness and heat to US producing areas. Therefore, we consider the downside risk for many agri-commodity prices to be limited, while the upside risk remains much larger. In addition, we will see funds continue to be active in agri-markets. This can exaggerate commodity price movements at times, providing both opportunities and risks for food and agri companies. Let's now check in with Carlos to see how coffee markets are expected to evolve next year.
Arabica coffee prices have been very stable in the second part of the year, with only a very small increase in September due to the dry weather in Brazil. Once the weather improved there, speculators took very aggressive short positions in the Arabica contract. A potential reversal poses a large upside risk and could take prices beyond 150 US cents per pound. When it comes to the Brazilian 1819 Arabica crop, we're still seeing doubts as to whether the dry weather has impacted the production potential. This especially holds true for regions like Zona da Mata and Espírito Santo, areas not so well traveled by coffee analysts. With this in mind, we are pegging the crop at around 59 million bags, which is a record crop but well below potential. But given that coffee demand is growing very well, record crops both in Brazil and Vietnam will only result in a 3 million bag surplus in 1819. The vast majority of which is expected to be in Arabicas. Now let's hear from Charles with an update on wheat.
The global wheat market remains heavily supplied, with an overwhelming 270 million tonnes of ending stocks forecasted into 2017-18. But excluding China from this equation, stocks will largely be unchanged year on year in 2017-18. In our view, this highlights a turning point in the rebalancing of stocks going forward. Rabobank forecasts marginal price strength for CBOT wheat futures in the 12-month period, albeit below the forward curve, as exportable world stocks erode for the first time in 6 years. The route to higher prices will be gradual in the absence of a significant weather shock, something, in our view, which appears well overdue. Given an ongoing low-price environment, global plantings for 2018-19 will see limited growth year on year. In the US, we expect a marginal 3% improvement in 2018-19 acres, which is predominantly led by more spring wheat acres, given the supply tightness for high-protein wheats, namely hard red spring and durum. The Black Sea region beat all production expectations in 17-18 and delivered 8% more than in the previous year. This was mostly led by an overwhelming record crop in Russia. However, as they are limited by logistical constraints, Russian stocks are forecast to rise, leaving more grains for exports in future years. So, excluding China, 2018-19 is forecast to bring about a 7 million tonne global deficit due to a combination of a 1% cut in production coupled with a 0.5% hike in consumption. This will be the first deficit since 2012-13, and it is the beginning of a trend towards rebalancing, a factor which drives our mildly bullish view on CBOT wheat. Now, over to Graydon, who will share some highlights on the soybean market.
Despite the global soybean balance sheet showing a continuation of historically high stocks, we expect there to be some fundamental differences in 2018. Global biodiesel policy, feed demand growth, and increasing global trade are all likely to be mildly supportive for prices in 2018-19 as global balance sheets contract. Although we expect to see a slight year-on-year reduction in global ending stocks to 95 million tonnes, and barring a global supply-side shock, global soybean prices are expected to be capped by historically high inventory as stocks remain at their second highest level on record. If we assume a return to trend yields, US soybean production is forecast down 1.4% year on year at 4.37 billion bushels, This would still be the second largest crop on record, and it should allow for record exports. Similarly, South American production and exports are expected to continue to increase. A combination of more supportive Brazilian biodiesel policy and a reduction in Argentinian export taxes are likely to incentivise production in the two countries over the coming year. All in all, the 2018-19 season could bring more price volatility to soybean prices than we have seen over the previous year.
Well, even if 2018 might end up bringing only a slight increase in many agri-commodity prices, there are several risks that can result in price volatility, and food and agri businesses need to prepare. If you'd like to know more about our views for 2018, please download our latest Outlook report or reach out to your Rabobank relationship manager.